Hello Freedom Builders and welcome back to the channel. This little video is about Warren Buffett and it is about Kraft Heinz, the big food manufacturing company. And as you might have seen in the title, I am kind of suggesting that I should be smarter than Warren Buffett when it comes to investing. I am not so sure that is the case, but those of you that have seen the Kraft Heinz case and seen it dropping tremendously over the last couple of years, you might have wondered what happened, why did Warren Buffett go into this deal? And a thing that I really like when I see something going down like this is I like to rewind a bit and see what would my methods have gone, what would they have told me to do at the point where Warren Buffett might have entered a stock. And there is a lot to be learned from that, and I normally do that, and it is not me trying to be some sort of smartass and looking in the rearview mirror and saying, hey, I'm smarter than the world. But a lot of the cases where I can see a stock drop very, very much, it could be General Electric, it could be some of the others, when I rewind and I look at the numbers for the company and I look at the graph, it is 100% clear to me that I would never have entered, or if I had entered, I would have gone out with 5 or 10 or maybe 12% of loss, and then I would not have sit through a huge downturn in the stock. So let's have a quick look at this, and this is not my normal stock of the week video. I think I have time enough to make one of these later today as well, but this is just kind of showing you how a very strict strategy can often keep you out of bad stocks. Now, the other day I made a stock about why I didn't enter Tesla, and some people said, well, that is just you trying to be to try to excuse why you didn't enter and so on. And my answer was all the time, no, it is because I have a very strict strategy. And one of the good things, one of the advantages of having a strict strategy is that I can actually go back in time in my charts and in my different software platforms, and I know exactly what would have had to be shown to me at that point for me to enter a stock. So I can backtest and I can try and learn from former mistakes. All right, let's get to it. First of all, just a quick history lesson. Kraft Heinz, the company, not the Kraft Heinz, but the early parts of them, were founded in 1903, I think it was, as a cheese manufacturing company. And then a ton of stuff had happened. You can hear that I'm a former history teacher, I guess. A lot of stuff happened, and where it starts to get interesting for us is in 2007 when Buffett first entered the stock. And at that point it was not Kraft Heinz. I think that was Kraft Food. I don't really, it has changed names a lot of times here, but he made a couple of $100 million up until 2011. But then in 2015 something interesting happened, because Warren Buffett joined up with a guy named Jorge Paulo, I think it is pronounced. He's from Brazil, a former top sportsman turned billionaire, and he has this company called 3G Capital. And what he's famous for is to buy up companies and then to cut costs really hard, and then use all the money that he gets out of cutting costs to make new acquisitions. That's kind of the way he's doing it. And Warren Buffett thought that was a great idea to join up with him. He saw some good synergies there. So they went in and they bought up Heinz for $23 billion. After that, they bought 51% of the votes in Kraft for $18.5 billion. So they took on a massive debt, and that what is that, $41.5 billion bought them the right to merge Kraft and Heinz. So it came to the brand Kraft Heinz. All right. What happened after that was they took the normal 3G Capital approach. So they started to cut costs really deeply. And for instance, they cut the advertising costs from 2.9% of revenue to 2.2%. At that point, most models said that they needed to be around 3.5% of the total revenue. They needed to use 3.5% of the revenue to ads, just to keep the brands where it was in percentage-wise towards the competitors. At that point, they were only spending 2.9%, and to get some more money out of it, they actually cut the ad cost down to 2.2%, and that is one of the things that might have gone wrong here. They also cut their research and development quite hardly down, and they might have made some mistakes during this process. All right, well, I've studied that, researched it quite a lot the last couple of days here. What happened? So of course there are a lot of details into this Kraft Heinz story, and it is easy for us to sit here and look in the rearview mirror and say, well, I would never have done that. But there's no doubt that Warren Buffett is one of the most shrewd businessmen and investors in the world. But of course he can make mistakes as well, and a lot of things happened in the market. The normal Kraft Heinz brands that normally were extremely strong, they kind of lost some of their magic touch, and people were turning towards organics where Kraft Heinz were a bit behind. A lot of people were turning towards store brands where it is not Kraft Heinz they're going for, but maybe Walmart's own brand or one of the other shops' own brands. So a lot of things happen in the market that might not have been able to predict. But let's just take a look at this case and see if I had used my basic, quite simple models and strategies, what would have happened. And if we take a look here at the graph, if you've seen my video about IPOs, you know that I never enter a stock for the first 1.5 to 2 years, because I simply do not have, I'm not smart enough, to say it simply, to know what Kraft Heinz, for instance, or any IPO, what the fair value is. I simply cannot see through all the numbers. I'm not savvy enough for that. So when Kraft Heinz started here and we saw a price around 60 when they merged, I had no idea if that was the right price, but something indicated that it might have been, or at least it was a good price, because the price went up on the stock. And that, of course, was because they started to cut the cost pretty quickly. And there was also a lot of name brand recognition in this. Now, Jorge Paulo is maybe not be the most well-known financial guy in the world, but Warren Buffett certainly is. So just the point that Warren Buffett had gone heavily into this stock was enough to actually lift it up. And that is one of the other things that I mentioned in a lot of my videos. Please do not buy a stock just because there is some sort of well-known person running it. Or at least that should not be the only reason. Because of course, the thing that Warren Buffett enters a company with a huge stake says something about the possibilities here. But that should not be your only reason just to follow these gurus, because there are years where they're not making money. And of course, Warren Buffett, he has, I don't know how many hundreds of companies in his portfolio. And if you just enter Kraft Heinz because he's going in, but you're not copying the rest of his portfolio, you might take a loss on the Kraft Heinz, but you miss all the gains that Warren Buffett makes in other stocks. So that's also a lesson to have here. If you want to copy one of the gurus, one of the masters, you should copy everything they do. You should enter when they do, you should exit when they do, and so on. But let's have a look at it here. If you have been following my Learn My Strategy videos, you know that one of the technical analysis part I'm looking at in the graph is if the RSI is above the 50 line and if the stock overall is doing better than the market. I want trending stocks, we see that in the RSI, and I want the trending stock doing better than the overall market. And if we take a look at this, we can see that Well, they started in the summer of 15. So basically, we should be up around the beginning of 17. Yeah, 15 here, sorry. Beginning of 15, and we should be up around the beginning of 17 before I'm allowed to enter into a stock like this. Now, do we see any possibilities here? Well, we might here, because you can see we are in an uptrend here, and the market is the stock is above the 2 moving averages here, telling us that this one is doing way better than the overall market. So here around the beginning of February 2017, at least our model started to tell us from the graph only that this might be a stock we should consider taking into our portfolio. Now, then, of course, we'll do some more research, because I'm not just buying this for my long-term portfolio just because people are entering. I want it to be a good, solid, long-term stock that I could invest in. And as you know, I often use Stockopedia here. Sorry. And I just found the Kraft Heinz here. You can see right now, it is nowhere near a place I would buy it. The quality 48, the momentum 54, and the stock rank overall 51. I want these to be at least 70. So it does indicate some sort of value here, but if we just look down at it, there's not much that tells us that this is something I would buy. Definitely not. You can see the earnings per share is not looking good and so on. So pretty much just at a quick glance here, I would not buy this. However, it is not now we're talking about. It is the beginning of 2017. So here, maybe you don't know it, but if you have Stockopedia, here down in print, you can just go down and you can find the date you want. It doesn't go a lot farther back than 5 or 6 years, but down here you can find the date. I just did that for us here, and we get a PDF file coming up, 3 pages of a summary of the stock. And here we can see that at the point where I got a potential buy here at the Kraft Heinz, saying that right now the momentum in the stock is right, I also wanted to see some fundamentals saying that this is good enough. And as you can see here, we have a quality at 22. We have the momentum though at 72, but the overall stock rank was only 34. That was simply enough to let this one go and choose another stock for me. I would not choose a stock that only had a stock rank of 34, never ever. And it might have been a good stock, and as I said the other day in the Tesla video, this is just a strict rule for me. And sometimes that means that I'm not getting into a stock like Tesla and I'm not taking 100% on that. But other times it means that I am not getting in on stocks where everybody was saying, yes, Warren Buffett is a genius, you should follow him, buy Kraft Heinz, everything is going up, it's going to double in value. People said that at the time in 2017. So just by looking at my charts, well, that's it, kind of interesting. Looking at the fundamentals, I would have said never ever. Price to sale at 4, Petrosky score only at 5. The bankruptcy risk was, well, they were not going to go bankrupt. I think people agreed on that. But if we were looking at their debt, we could see that they were taking on huge loads of debt here. The interest coverage were fair, but the ratios here were not good. So just basically here, no, I would not have bought it here. And I know that because I have strict rules and I follow them every single day. You could also see that you might have been tempted on the dividend and saying, yeah, it's a new company, but look at the dividend yield. It is around 2, then it's 3, and they're expecting it to go up. Well, that didn't happen, or let's see, no, they actually started to cut dividends. But also down here, look at the dividend cover. They were nowhere near, in the first years here, they were nowhere near able to actually cover the dividends with their earnings per share. So basically, there were so many alert bells ringing here that I would have said, no way ever I would buy this one. And then, what happened to the price? And let me just say again, this is not me trying to be smart and saying, yes, I could have predicted the big downfall in Kraft Heinz, because I couldn't. Sometimes what happens when I get a sell signal is I might have gone in at some point in a stock, and then I get a sell signal here, maybe, and then I get out of stock and it rockets up, and I get left behind. I have to get in somewhere up here again, and that is simply the price I am paying for then sometimes not be in a downturn like this. And that is a constant compromise you need to do when you are investing, because if you want to be on all the Teslas that is going to the moon, you're also going to be on some of the droppers here. So what happened to Tesla here is that I got my first very clear sell signal around here, and that was in the end 70s here, 78 or something like that. We can see I might have, if I had been in here, I might have held it just to see if it dropped further, and it went up a bit, and I might have gone out at 73 or something like that. Sometimes I give it a bit of rubber band in my decisions here, but up in the mid 70s, I would without a doubt have exited this if I had been in it from early on. I wouldn't have, but if I had been, I would have exited in the mid 70s, and I know that for sure. I do it every single day. I show my Danish subscribers how I do it, and they can follow my trading on the Danish Facebook site. I know those of you sitting in other countries in Danish, you would not have much joy of reading Danish there, but just to tell you that this is what I do every single day, and my subscribers can tell you that that is right. I am sticking to my rules. But what happened here is went down from around 75. And as you can see here, it was doing worse than the overall market all the time down. So there was no way. And the RSI was also below 50. Now it tipped up a bit here, but I would not have been tempted because it was not doing better than the overall market. So at the entire journey from mid 70s and now down in, it was down in 25, now it's up at 29. I would not have been in. We can just draw our regression line a bit further here, seeing, yeah, we are just maybe topping up at the top of the regression line. I'll make a video about regression lines next week for you, because that is a tool I'm also using a lot. But what I want to see here, if I should buy Kraft Heinz, is I wanted, first of all, to see the fundamentals get better. So I wanted to see more there. I know that a lot of interesting things is happening in or are happening in Kraft Heinz, and they might be turning it around, but I'm just not into buying turnaround candidates because they are just failing too often for me. I like things that have started a trend in their earnings and in the price. So I want to see a year or two more of good solid progressions in the earnings, and then I want to see the RSI above 50. I want to see the CRS line here, and if you don't know what this line is, look in the playlist at my YouTube channel under Learn My Strategy. There I tell you all about this and where to find it for free. So what I want to see more than that is I want to see a break up through the regression line, and preferably a bit of a drawdown, because before we see the buyers come in again. And that is because I want to see a trend that has started, that has some momentum. That of course means that often I don't, or I never get in at the bottom, and often I see, let's say I get in up here around 37. Well, the stock has already gone up 51%. But that's not really a problem for me, because the price I'm paying for not trying to pick the bottom is that I miss the entire downturn, the entire decline in stock prices here. So, and then again, people would say, yeah, but this is clear. Let's say in a 6 month or 12 month, it has gone up to 60. And people would say, yeah, but this was a clear bottom. But you know what? The exact same thing here, and here, and here, and maybe here. And now, at some point, they are right, of course, that yes, I knew it. This was a bottom. From here, it went up. But if they had bought up here when they thought the first bottom was there, and they kept buying all the way down because they want to lower the average buying price, then they were in a huge risk here. And if it keeps going down, and who knows if it can, we saw the case of General Electric that has just kept going down and down and down. You could all of a sudden have 50 or 70 or 90% of your capital tied up in one investment. So this is what needed to happen before I would like to buy Kraft Heinz, and probably also a lot other. I don't see any signs that Kraft Heinz in the near future will be a stock that I would like to buy. But that's not really the point here, because this is not a thorough stock analysis. This is a rear view mirror analysis as to would I have entered this stock at any point, and I wouldn't. The only place where I could have been tempted, the fundamentals told me that I was not allowed to enter. So that is always nice to see in these downturns. And then of course, if it goes up, and I hope it does for all the investors and for Warren Buffett, then it's good for them and I can get in on a later time. So this was kind of an educational approach to how my method works. And I do this all the time. I also did it in Tesla when it went up, and tried to see, well, could I learn something here? Was there something I should change in my strategy so that I would have entered Tesla? I haven't really found anything, because my strategy kind of works well and have done that for 15-20 years. But I'm always looking to see if there's something I can do a bit better. I hope this was kind of an inspiration and maybe a bit educational to you. If you have questions for the videos or for some of the tools I'm using, just write them underneath the video. I'll do my best to answer as quickly as possible. Thanks for now. I will return later today with a stock of the week video as well. And yeah, you'll hear from me a lot in the next couple of weeks. Talk to you soon. And if you haven't done already, remember to subscribe to the channel and hit the like and bell notification, all that down there. Bye for now. Take care of your money.